Good afternoon. Thank you for joining OTC Markets and FIG Partners as we discuss how to increase your bank's visibility in 2018. I'm Laura Hamilton, Associate Vice President of Corporate Services at OTC Markets in New York City. I manage all of our community banks here at OTC Markets. Today, we're here to discuss the challenges banks are facing, how to attract new investors and raise capital, and why BlueSky eligibility is important. Before we get started, I'd like to address a few housekeeping items. All attendees are on mute and will remain on mute throughout the presentation. All Q&A will be addressed at the end of the presentation. Please enter questions into the box on the right-hand side of your computer screen. Additionally, all contact information is at the end of the presentation. The presentation in a PDF format is on the right-hand side of your screen under the handout slot. Joining me today are Mike Acampora and Troy Carlson, both with FIG Partners. Today's agenda includes going over who OTC Markets is, how we compare ourselves to the exchanges, NASDAQ and the New York Stock Exchange, and how banks are gaining visibility and ultimately helping their shareholders on our market. Now, you may be wondering, who is OTC Markets? We are the over-the-counter market and have been around for over 100 years. We operate the trading platform for 3 markets: the OTCQX Best Market, the OTCQB Venture Market, and Pink. 10,000 domestic and international companies trade on our market, including BNP Paribas, Heineken, and Computer Services. I'd like to introduce Troy and Mike to speak about FIG Partners and who they are.
Good afternoon. Thank you for this opportunity. Mike Acampora and I, with FIG Partners, are the corporate and private client services team working with the community banks and the OTC Markets Group, answering your questions today. And again, we will be available offline if there are any questions that come up at a later date. So again, we'd like to thank our partners, the OTC Markets Group, for putting this afternoon's call together, and Mike Acampora and myself will make ourselves available if there's any questions. Thank you.
So you may be wondering, how exactly is OTC Markets different from the stock exchanges, as in NASDAQ and the New York Stock Exchange? So as I mentioned a couple moments ago, we have 10,000 securities that trade on our market compared to about 3,000 that trade on NASDAQ. Additionally, we are more flexible and do not require banks to register with the SEC. About 70% of our banks do not file with the SEC. Since we allow this flexibility for banks, we have more banks that trade on OTC Markets than NASDAQ and the New York Stock Exchange combined. We've actually had 3 banks come over from NASDAQ in the past 2 months to begin trading on our market, and we have a 4th one that's announced and will begin trading before the end of the year. So since we have these 10,000 securities, we segmented our market for 2 very different reasons. The first is to give companies the option of where they want to trade, and the second is to improve the OTC investor experience, which we'll touch upon throughout the duration of this webinar. Our best market, OTCQX, is investor-focused and has high financial standards. We do not allow any penny stocks, shells, or bankrupt companies to trade on OTCQX. Next, we have our OTCQB Venture Market for developing companies. Again, we do not allow bankrupt companies to trade on this market, but shells are allowed at this point. Lastly, we have our bottom tier, Pink. Unlike OTCQX and OTCQB, Pink is our most risky market since there are no financial standards and we have a number of bankrupt companies and or financially distressed companies on the market. In summary, the higher market tier your company trades on, the more shareholder friendly you are, and the lower the market tier, the more risk the company carries. So our goal at OTC Markets is to help and educate companies that trade on our market. We help banks find the best market to trade on for their shareholders. Now that you have a better understanding of who we are, I'd like to turn it back over to Troy and Mike to discuss some of the issues brokers and investors are facing when trading on Pink versus OTCQX and OTCQB.
Thank you, Laura. This is Mike Acampora with FIG Partners. Once again, we'd like to thank everybody who is attending and listening to this OTC Pinks versus the QX webinar. I'm bringing. I've been asked to speak on behalf of our hands-on experience with dealing with pink sheet bank stocks. We are FIG trades every OTC listed pink sheet community bank in the United States, and recently there have been some issues that are starting to creep into the delivery and the transfer of the shares. And I thought it was Troy and I thought it was very important that we start to address these issues with our pink sheet customers. And then Laura invited us to speak on some of these issues. So without further ado, you'll see on one of the slides that the pink peer group are bankrupt, financially distressed, and penny stock companies. Well, what is starting to happen as we start to accept individual securities from pink sheet listed shareholders is that there have been a number of processes that have been put in by brokerage firms all across the street that are geared towards pink sheet listed securities that increase the cost of handling and also decrease the liquidity and the opportunity for banks to spread out and bring in more clearing firms and more broker dealers. So what we're seeing, and this is, I'd be more than happy to discuss this in more detail offline, but the bottom line is that we're starting to see larger firms, brokerage firms, wirehouses reject pink sheet securities and customers' ability to deposit pink sheet securities in an existing brokerage account. It goes to the suitability rating, but it also has a lot to do with BlueSky laws, et cetera. But that is one of the reasons that we wanted to bring this to the attention of our pink sheet colleagues that we make a market in. So, just very quickly, when one of your shareholders, if you're listed on the pink sheets and listening, one of your shareholders deposits their shares, we open up the account, accept the shares in, and then there's a whole nother group of process where there's paperwork involved, filling out of documents by our sales assistant. Then we have to get approval to deposit the shares from the custodian. Once they're deposited in the account, the paperwork must be in order. Then the shares can be sent to the clearing agent, the transfer agent, excuse me. So bottom line is the process can take anywhere from 2 to 4 weeks from the time we receive your shares from the pink sheet listed securities to the time the shares are redeposited back into the account and ready for sale. So there's a long lag process. And that's something that could be greatly alleviated with a move up to the QX. Next, my partner Troy will discuss the liquidity involved with that.
Yeah, thanks, Mike. Yes, I'm certain everyone on the line who is on the pinks has had some horror story or has been made aware or has heard from their shareholders some of the issues that Mike discussed, and whether it's custodians no longer accepting shares on the OTC pink markets in IRAs or other sort of qualified vehicles, or it's the difficulty of someone who trades online with a E-Trade or Schwab account not accepting those shares for deposit. Again, all of these issues that Mike touched on are becoming more and more common, and obviously, as you mature up the OTC markets from the pinks to the QX and QB, along with that will come liquidity and the ability to for those shares on those markets to be accepted. Again, we do see a substantial increase in the amount of volume that happens as a result of that migration up the OTC markets ladder, and I don't need to tell you that along with that volume and increase in liquidity, there's also a bigger audience of shareholders that are interested now, and that currency at that valuation or that increased liquidity also gives you other options in terms of your capital management and decisions that you make in terms of managing the bank's capital. So again, I think it's pretty simple. Again, in summary, that as you mature up the OTC markets from the pinks to the QX and QB, you'll see a substantial increase in liquidity, which will certainly alleviate some of the headaches that we're coming across now as the pinks become less and less in favor. So with that, I think Laura, will you tell us what then we can expect in terms of the current financial information?
Yes, absolutely. Thanks, Troy. So in terms of your financial information, we require banks to upload their quarterly financials when trading on OTCQX or OTCQB. This is best practice as a reporting company from a capital market standpoint. This is something the banks you're already doing. It's a matter of it getting distributed to a wider financial and investor audience. So this means if I'm a shareholder, I can log online, type in the bank's ticker symbol, do a search for it, and find current financial information instead of going to the bank's website, finding a potential investor relations tab, which is not always there, then trying to scroll down to find the quarterly financials. So all banks are either doing their call reports and or SEC filings to their regulator. You have these financials, a matter of distributing it. So there are a number of banks, and a number of times I've gone online to look up information and found financials from 1997, 2002 that are just completely outdated. So this is an issue when trying to, if it's a shareholder and or investor, try and find information that's just significantly outdated. Again, no penny stocks are allowed on the OTCQX market. This means that you must have a certain price point, which is $5 or more, or if you're under $5, you must have a certain amount in assets and net tangible assets, which banks do have since the banks are comprised of assets. Additionally, BlueSky recognition. This is something that we will get to in a couple of slides, but there is no BlueSky recognition on the pink market, and you'll learn more about the significance in just a few minutes. At this time, I'd also like to talk about raising capital and attracting new investors to your bank's stock. So OTCQX and OTCQB are SEC established public markets. This means the SEC recognizes OTCQX and OTCQB. However, they don't recognize pink as an established public market. They see this as a default or open market, and like I mentioned earlier, there's no financial requirements to trade here, which then you have the peer group of financially distressed companies, potentially bankrupt, penny stock world, which is something that a number of banks do not want to be associated with, to be perfectly honest. So this does help to trade on an SEC established public market if you are trying to do a raise or some kind of financing. Going back to attracting new investors or potential capital, I'd like to turn it back over to Troy to discuss stock as a currency, and this is useful for potential M&A transactions as well.
Sure, thanks, Laura. Yes, first of all, I'd like to give the audience group a little bit of background in terms of FIG Partners. FIG Partners, if you don't know, is a investment banking boutique focused just in the community bank space. We work closely with the OTC Markets Group as a corporate sponsor for the OTC Markets candidates, our banking brothers and sisters, and we are probably one of the more active corporate sponsors in the OTC market. So FIG Partners is also very equipped to help the community banks in raising capital and strategic alliances and advising on M&A. FIG Partners is proud to be the leading underwriter for banks under $1 billion in assets. So certainly the increase in visibility, the increase in volumes will add to the attractiveness of your stock as a currency. And based on what we are seeing in terms of the current market and the current market valuations, certainly now is the time for us to expand on these conversations and for the banks to consider the possibility of their currency being an attractive tool in order to enhance their franchise. So again, without getting into a lot of details, the market seems to be primed for the opportunity for those banks that are interested to use their currency at these valuations as an attractive tool to acquire other similar community banks. So again, I think I've touched a lot on that the visibility. And why don't I pass it now to Mike, who will talk about the brokerage side of the business.
Thank you, Troy. From a real life standpoint, we are involved in dozens of individual pink sheet traded bank shares every day, working with individuals, setting up accounts, getting their shares deposited, and working with them. And like I said, with all the amounts of paperwork and everything that's done in the background. So before I go into the brokerage firms, I just wanted to let the people that are listening now, the people who we are actively involved in trading, that remember, as we work through this process, Troy and I are here to help you and help your customers in any way that we can. And we have a benefit because FIG Partners does only community bank stocks. So it is accepted by our auditors and our other people that watch over us, our watchdogs. That we have a little bit of a benefit that we can handle pink sheet trading and work with the transfer agents and such to get those done. But as as your banks get bigger, as you continue to access the capital markets, and your trading, your trading visibility begins to increase as you move up to the QX markets, which Laura will tell you all the benefits for that for very nominal. I mean, the rewards and the reward on your investment is tremendous in our opinion. The brokerage firms, what happens is as you move up the QB and the QX, the acceptance of the stock, the quotes that the stock trades in are picked up by more and more trading desks, and there are the large wirehouses and the large regional institutions that work in stocks will begin to accept your shares, the shares of your shareholders, more frequently if they're listed on the QX, especially if they're listed on the QX and even on the QB, because there's a as Troy and I could discuss this more, but one of the benefits of listing on the QX and one of the game plans that you'll put together listing on the QX is to work with your transfer agent to get DTC, DRS, DWAC eligibility, which basically means that you're now electronically transferable from firm to firm, and that in itself will open up the avenues of being able to do, of your shareholders being able to do business with just about every major brokerage firm, whether it's regional or wirehouse, et cetera, et cetera. On the BlueSky, the OTCQX has already got 26 exemptions for BlueSky. What does that mean?
27, actually. Sorry, Mike.
27. Thank you, Laura.
And
27, which is a...
And we'll get to that slide in about 5 minutes if we want to save the BlueSky piece.
That sounds good, but that's just another major benefit of moving up with the brokerage firms that greatly enhances liquidity and the expedience of your shareholders as they look to either buy or sell stock with existing accounts at other firms.
Great. Thank you so much for that, Mike. Now we're going to talk about some of the performance of OTCQX Banks that Mike alluded to just a moment ago. So you may be wondering why banks are joining OTCQX. As we've been discussing, the purpose of the market is to increase visibility and to allow for the ease of trading. So from a visibility perspective, we offer CEO interviews, virtual investor conferences, and a number of other visibility tools to help you tell your story and potentially find new buyers or sellers. Similar to NASDAQ, we also offer a bank index, which is used to benchmark your peer group. Our OTCQX index has returned 56% since inception in 2014, and that is greater than the SNL Bank Index. Additionally, when looking at banks that have moved from QB, the middle tier, to QX, the highest tier, before the Trump bump, Essentially before the election of last year, the median price went up 18%, volume 31%, and book value 15%. So this is moving from the middle to the top tier. So essentially, you could expect greater numbers from a median standpoint, from moving from the pink market up to the QX market. Again, this goes back to the number of reasons we've been discussing about, from the no penny stocks, the ease of trading, and the visibility. So all really good numbers there to show how OTCQX banks are performing. Now we've got into the time that we'd like to discuss BlueSky for secondary trading. We've been working very hard over the last 12 months to get BlueSky exemptions for secondary trading, and are currently recognized in 27 states for OTCQX. This compares to 24 states for OTCQB. So I will now turn it back to Mike to discuss why BlueSky eligibility is extremely important. And we do expect to get to even more states next year, and ideally get to all 50 by year end of 2018.
Okay, I'm just going to give a quick hands-on example of the BlueSky from a broker dealing with your shareholder. One of your shareholders comes in and has 1,000 shares of your stock for sale. I'm the broker. The customer has an account with us. The bottom line is, you know, I take the shares in, I go to sell the stock, I mark it unsolicited. Okay, try to get the shares deposited in the account. Immediately, you know, typically with most major firms, the broker dealers are going to look at all unsolicited orders and double check them. For BlueSky, they have an automatic system built into their computers that picks up whether a BlueSky violation has occurred or not. The broker has no clue, and most brokers wouldn't think about it. They're just trying to facilitate the customer's order and do what's best for their client. However, if the broker has marked the ticket solicited, and most tickets are marked, 99% of tickets are marked solicited, because we have to give the customer price, we have to give the customer some guidance, we have to give the customer some information on the stock, and the rules for solicitation are very strict. What'll happen is that if your shares aren't BlueSkyed in the state or in the state that the broker is doing business with, a rescission letter is issued by the compliance department. The broker has to sign it, and basically that gives the broker, the customer, has to be sent to the customer, signed by the customer, that gives the customer a right to put the stock back at that price to the broker for 1 year. And and this is a major reason why most of the pink sheets are rejected, and most broker dealers don't want to deal with pink sheets, and that is because of the rescission letter and the BlueSky laws that occur in those type of situations. It's a compliance nightmare. So that's one major takeaway, and I'll give it back to Lauren. Thank you.
Thanks, Mike. So now you may be wondering, what's the process of moving to the OTCQX market? So again, this is our banks only market compared to QB, which you are also eligible for QB. However, you are paired with a number of non-banks in that market as well, pre-revenue, healthcare companies, technology companies, mining companies, what have you. So the first step is to consult a corporate sponsor. This is FIG Partners, for example. What they do is they're going to make a market in your stock and help support the bank from a trading perspective, and help you from a shareholder services standpoint, depositing shares, getting them traded, converting to electronic shares, everything we've talked about over the last 20 or so minutes. Then the bank fills out an OTCQX application. This is sent to OTC Markets. We process this, go through the background checks on our end. The bank then uploads the past 2 years of financial reports through our website so that we can distribute that information to all the financial major portals, as we've discussed. And then the bank gets approved for trading on OTCQX. We publish a press release, send it to any local press contacts of the bank to help share your story in local communities, put your logo on our homepage on your first day of trading, and really try to get the bank's story out there. So it's a very simple process. I will say, when I do speak to banks, some are concerned about the reporting requirements. The good news is that the banks on this call, your current disclosures already qualify. We just require a balance sheet and an income statement on a quarterly basis and annual audited financials. So it becomes a very simple process. In terms of qualifications, community banks that are looking at the OTCQX market must have a bid price of $1 or more and have total assets of $100 million or more. So if there are any questions about unaudited quarterly reports, I can help you offline. But again, it's really just a balance sheet and an income statement, and then any changes quarter over quarter, year over year that you would like to send to show your shareholders. I have a number of examples, and I'm happy to share those with you offline. At this time, this concludes today's presentation. I'd like to open up the conversation for Q&A. Please submit any outstanding questions to us to address on the right-hand side of your screen. I'll give you just about 15 seconds or so to do this. So our first question is, why won't large brokerage firms accept our bank shares for deposit into customers' accounts? I'll turn this over to Mike and Troy to answer.
Thanks, Laura. Yeah, I think we touched on that just briefly when Mike was going over some of the bank BlueSky restrictions. So because of the enhanced legal and compliance issues that Mike discussed, most of the national warehouses who have brokers that aren't registered in every state or who require the shares to be SEC registered and BlueSky in every state are just simply taking the approach that there's too much conflict, there's too much additional cost associated with doing trading business in the OTC pink markets. So the cost to do the business is what's deterring them from even accepting the business. So, Mike, anything you want to add?
I think that was very accurate, Troy. You throw in the BlueSky exemptions and the fact that it's a very low revenue generator, usually done just that for the help the client out. A lot of yes, I would concur. Thank you.
Great, thank you. Our next question is, what financial statements do you require for OTCQX? Again, it's really just a balance sheet and an income statement for your quarterly reporting. Essentially, what you put when in your reports to your regulators, and on an annual audited financial standpoint, just your annual report that you submit works for us typically as well. If you do have any further questions, I'm happy to review your current financials and advise if they meet our requirements. But it's a balance sheet, an income statement, and annual audited financials from a reporting standpoint. Again, not different at all from what you're currently doing. Our next question is, what effect does moving up to the OTCQX from the pink market have on our market makers? Mike and Troy, I'll hand this one back to you.
Great, thanks, Laura. In terms of the effect it has on your market makers, in essence, there is no effect. FIG Partners would be the corporate sponsor, which will work with the bank along with that transition. But the other market makers, generally will not be affected. So the only effect that you should see would be the increase in visibility, the increase in volume.
Great, thanks so much. And we have one more question today, unless anyone else submits questions in the next minute or two. What can my bank do today, not tomorrow, but today, to help improve shareholder liquidity? Troy, Mike?
I can answer that question, I think, very simply. Obviously, from our standpoint, as the brokers that are handling working with the individual shareholders, one of the things that they can do today is to work with a broker dealer that has the capability to work with your individual shareholders and has the skill set. And obviously, this sounds self-promotional, but like I said, FIG Partners, we're not only as your market maker, but if you're listed on the pinks, we certainly have all the capabilities of working with your individual shareholders and perhaps alleviating some of the frustration that they may run into trying to get their shares deposited. And one of the, besides moving to the QX, which is something that everybody on this call should be planning or could certainly put into their planning process. Last but not least, we run into situations where there's restricted shares. A lot of the founding shares have the original restrictions on them. So we're also experts at removing those and working with the shareholders to get those shares free and clear for trading.
Great. Thank you so much, Mike. I really appreciate it. So this wraps up our Q&A session. Thank you so much again for joining OTC Markets and FIG Partners this afternoon. A recording of today's webinar will be sent out to all participants. Please don't hesitate to reach out to myself, Troy, or Mike with any additional questions. Our contact information is on the screen. And thank you so much again for joining us.